Listen, I know you've been wondering because I wondered the same thing: how the banking system work in America. This is our last series of our part 4 of Black History. We're going to decode and break down money and banking and how it works. What's going on, y'all? It's Dr. BlackWealth. It's another episode of Minding Your Biz. And I got a co-host here. The co-host.
That's right. Hey, co-host with the most. It's your girl, Mrs.Fabfinancial, coming at you, minding your biz. We're talking about banking, about money.
That's right.
How it flows.
Can't talk about it enough.
How it works.
Right.
The setup.
Yeah. All of that.
All of that. Right.
I'm pretty excited, y'all. Y'all can tell. I like stuff like this.
I'm indifferent. I have opinions. I have our banking system is our banking system. I mean, the history of it is pretty cool, right? Because you can follow the money even till today, how some banks and people were instrumental in the development and the founding of our banking system, which you're probably going to touch on the Fed. So yeah, the history of it is always fascinating to me. To me, how it comes about, why, and then how people take it and run with it and abuse it. But I think the initial thing from the initial concept for most industries or most things that we know now as commonplace or normative come from a place of concern, come from a place of need initially. And I think man do the thing that man does and puts his thing all over it and exasperates it or takes it to a new level. But I think the history is always important because intent matters to me. So it's important. And I think knowing how something started to me is really gives you insight on how we today have taken advantage of it or not taken advantage of it.
No, I agree. So, like, make no mistake, because us breaking this down and me breaking down the history of, like, the Fed, and I'm going to go a little bit down of a little bit of a rabbit hole, but my intent is
come out.
I'm going to come out. My intent is for us to understand how banking was established, the use of money, not to run down a conspiracy rabbit hole to say that's why the man keep us down. It's for us to understand how this works so we can understand how we can apply it for us.
Absolutely.
That's what this is about.
Yeah.
Period.
Got it.
Just so we clear.
Right.
All hearts and minds is clear.
That's right.
Cool.
I got you. If you go too far in the hole, I'm like,
right.
On out.
Right. So let's break this down. Let's get it. So here we go, right? When we talk about the Federal Reserve Act, right, most of us know, if you don't know, you'll find out today, right now, that the Federal Reserve is not a government-owned entity. It's a private organization that is adjacent and parallel that works with the United States government, right? So to understand how it was formed, before I get into that little conspiracy rabbit hole, we got to understand who are the players that formed it, right? So to understand the players that formed it, we got to go across the pond.
Oh Lord!
Right,
all the way over there.
Right, we gotta take them there. We got
going in that rabbit hole.
We gotta take them there, right? So the way that the world banks today, right? You have to give credit to a German Jew named Meyer Rothschild. This was a guy who was in Germany and established a bank in Germany, and then understood how money works and result to power, right? Of course, we know that money was instituted way back when. If you want to go down that conspiracy theory, which I'm not, but the Knights Templar established the banking and money system, but we'll pull out of that. So Meyer Rothschild discovered or started a bank out in Germany, and so what he ended up doing was to me it was quite genius, right? So once he had his sons, he sent them across Europe to 5 different parts of Europe, right? To where he established banks in London, Paris, Naples, right? Germany, and one other country, to where he had it to where he was instrumental in being close to governments. He understood relationships and power.
In politics.
So if I'm cool with whoever the prime minister is, that the government that controls that country, if I get close enough to understand, see, once you build relationships with people, what happens is people get comfortable and they start to talk.
Mm-hmm.
So when the country folds or they in trouble, right? Everybody should understand that to run a government organization is not by any means free. It costs us money to run any organization we choose to run.
Absolutely.
So he understood it perfectly, established himself in 5 different countries, and was very close with political figures to establish a movement that if the country needed money, he would be the ally to bring in and fund the money. Now, here's where morals come into play. Right? So this is where the Bible gets into where we misunderstand the scripture on money, the root of all evil, right? So all acts of evil is what the scriptures say. But where we get into morals is how people handle the power that they have. Unfortunately, or fortunately, I guess the side of the fence you choose to be on, Maya Rothschild was one of those people who consumed finance to consume and control government. He said, I care nothing about the government and its system. I care more so about the money. He who has the money controls the government, who controls the politics. And he was a prime example of that. All wars that funded against countries, he funded both sides of it, right? Whoever was at war, they funded both sides of it.
Mm-hmm.
Even down to be particular about this, right? Even down to Hitler. Hitler was funded, and it was funded through the Rothschilds, right? And so he was one of the people who established the funding system against countries, war against war. Now, war brings in money, war brings in rule, war brings in military, and it produces power and control. Now, to understand why he even established that, you got to understand that back in the day, there was an economist named Stuart Crane, right? This was out of a book called None Dare Call It Conspiracy, where he explained exactly how if for banks to make money, they lend out money and they collect interest on the money, which gives the bank income to have more money.
Mm-hmm.
So back in those days, for kingdoms and kings to receive money, what banks would do, right? And if anybody watched Game of Thrones, this was on there. What banks would do is they would put somebody in they will put somebody inside the house, basically. So if I'm a king and I ask you bank for money, and I say, hey, if you say, hey, I'm gonna give you $1 billion at whatever percent interest, I need my money back by this date,
Mm-hmm.
right?
Mm-hmm.
So in order for you to make sure and ensure that your money is being well kept and protected, you get a seat at my table.
Mm-hmm.
In my kingdomhood,
Mm-hmm.
right? And it's the same thing that works for politics. If I go to the prime minister, if I go to the president, I'm lending you money. I got a seat at this table to ensure my monetary interest.
For sure, it was nobility who had influence and money who got a seat at the table,
right?
And therefore got access to money and land,
right,
to continue the wealth building of themselves,
right?
Kind of how they went. Yeah.
That's how they influence your favorite subject, politics.
Mm-hmm.
Right, through the people who had the seat at the table.
Right, because if I'm sitting at the table next to the king and
right.
the king writes the rules, then the king is he's gonna bend to my ear and lend to me because of our relationship.
Right.
Then the money that I'm seeding and funding you.
Okay, now y'all see we agree. Look,
Yeah, we on it.
We in the
We
money.
in it.
We in the money.
I don't think
We
we've
in the
never
money.
been in it. I just think we need to play that game.
For sure.
Okay, we in agreement.
We look, we in the money. We in the money, right? So all right, let's speed this up. So we understand the establishment that Meyer Rothschild has is a visionary, right? I think is one of the most ingenious things that he probably could have thought about or did, right? Regardless if you like him, not like him, Jew, no Jew, whatever that looks like, right? And so then you have people seeing that countries was bended by the rule of money and centralized banks, because that's what he established. All the centralized banks are owned by private institutions or companies, if you will, who own banks, right? Now we get to America. And America is established, and the basis of American freedom was to be free from British control, right? Correct me if I'm wrong. British control, and establish a rule. They seen an opportunity of new land, new opportunity, new wealth being built, own rules being played. These are white men who thought this through and built this out.
For sure.
And when they built it based off the rules that they had through Declaration of Independence, they freedoms from the British and all that stuff, they had one particular race and gender in mind when they did it. It's not necessarily about black or white. At that time, it was about white men, period.
Facts.
That's all it was about.
For sure. I don't think anyone is in discrepancy of that.
Right. So see, sometimes, I like to do this because I think that we get caught up, especially today, we get caught up in emotions of an opinion or a fact or a thing. And we never go deep to understand, well, how did we get emotional? That's how did we even get to this point where we are emotional, right? And so we bringing it back. So, the heads of America understood the power play that the Rothschilds and international and centralized banks had on the countries in Europe. And so when they came to establish America, they didn't want that. In fact, Thomas Jefferson wrote specifically that, basically, we shouldn't be controlled and ruled by banks.
For sure.
Right?
That was the ultimate control in being independent from the church and the British government.
Right. But see, the Rothschilds understood that the key to government was control. How you gain control was through money, right? So much, in fact, that President Jackson, he abolished the central, because we did have a central bank. He abolished it in 1836, right? So then you got to understand the players. You got Rothschilds and his interests, right? And so it's said that he has agents of underneath him, meaning people who protect his interests or who
lobbyists,
current
right? Day lobbyists,
all
for
of
sure.
Right. That's a prime example, right? So and that's how that established. One of the people who was instrumental in that was a man named Paul Warburg, who's from Germany and is German. Right along with Rothschild, they both established banks. His family had banks. Rothschild's family had banks. Was the one who first established that. So then what happened is, now we in America, of course. America is establishing its freedom. America want to be separate from banks. They don't want to have rule over banks. They don't want to have private people telling government what to do. They wanted the government to be free for the people, or for white people, white men specifically, and their rule and their interests, right? But things happen in America where we go through wars and
people. Things happen.
Things
Time,
happen.
changing, culture, mindset,
right,
attitudes about things.
Yeah,
for sure.
And I guess a little bit to understand that is you got to understand the key players in America from a business perspective. So this will be people like the Rockefellers,
heavy bankers. There was heavy banking and insurance.
Yep.
Right there.
J.P. Morgan.
Definitely J.P.
Rockefellers, Vanderbilt, and Carnegie. Right.
Because this is also during the around the Gilded Age is when industrialization was happening, right? America is excited about pave in a new way. And so how do you do that with money? You have to fuel the industry that is fueling industry, right? You had coal and you had railroads and you had things happening that needed to be funded, right? Stocks were huge. Like bankers were the thing, right? In industries.
Yeah.
You're getting into coal. Like it's like we need the coals because the trains are running. They're taking stuff from the West Coast to the East Coast. Also, it's industry.
Yeah.
People are making a lot of money.
Yeah.
And so but it also shows the lack of regulation and why you do need rules in place. Because with to me, the Fed also helps prop up, right, what we have now, which is our banking system when a collapse happens. And that's why it came about, the collapse. And I think it was 1907 that helped create the perfect environment to then seize on the moment to say, hey, JP Morgan has the money to help prop up these banks. Same thing that just happened with the California banks, right? The businesses who had the liquidity to fund and put money in the market to help the banks either buy them out, prop them up, because they knew that, hey, if we have a run on the banks, if people want to pull their money out, we're in a bad place here. It's a tale old as time, right? Banks don't hold money. They leverage money. They use our money to fund the projects to rent to you. They basically rent a center. They rent you the money at a premium. And so they're not holding it. So if everyone goes and says, I want my money back, we have a problem. That's what they call run on the banks. And so that's what happened in 1907 through some basically betting. They were betting against, stocks, and it wasn't as regulated, and they didn't have the liquidity. The stock fell. The bank went bankrupt, and it was a run. They're like, oh, wait, but that bank also held the note and it had money for other banks. And so JP Morgan was like, okay, well, I got some money. I can help y'all out.
Government came to him.
I got some money. I can help you guys out. We have a central banking system to help prop up the bank so that we don't have people losing faith in the system, wanting to take their money because we need their money. If they don't put their money with us, this system can't work. We are not a bank if we cannot collect money, right? And so he, saw opportunity, got the other banks together. It was him and I forgot some of the other bankers that were involved, but he was very instrumental in it in setting up for the central banking system, which is now known as the Fed.
For sure. So,
which is why his bank they're very prominent today because of that history.
Yeah. And so to understand JP Morgan, right, you got to understand his father and his father's history, right?
Coming from money.
They were had really good relationships with the Rothschilds, right? So everything his father knew, some of that stuff he was like mentored or brought up through the Rothschilds, and he established what's known today, in my opinion, from the investment banking standpoint. Yep. JP Morgan's father was the one who owned a bank, but he understood that, hey, people are going to start businesses.
Yeah. And
some businesses might need funding and some businesses might fail. So if I could come in a non-profitable business and make them profitable, now he has a piece of the business, so he gets a percentage and he gave them money, which interest on the loan. Yeah. So he established killed two birds with one stone. I got interest in your business and I got percentages off the loans that I'm lending, right? And so JP Morgan was very instrumental as he tried to show up his father in creating a name for himself in America. See, then America was about forming industries, from railroads to oils to steel, cotton, right? It was about forming industries.
Innovation. It was tons of inventions. With
Thomas Edison being at the foot of it all. He established the electricity system, and JP Morgan was instrumental in that funding, right? So just with that, prime example of how real business works.
With textiles, heavy textiles.
Yeah. So a prime story about how real businesses work. Thomas Edison created what we now know as the electricity. He did it through science of electricity, I want to say from a DC model, right? So you got AC, DC. He did it from a DC model. His apprentice, I forget his name, established it and said, no, we could create light and establish it through an AC model.
Yeah, the filament or something.
Right. And so they both was at a race to establish which theory was the best and which was right. And both of them was funded by investors. So JP Morgan said, we're going to build a power plant up in Niagara that from the fall of the water, it will give enough energy to light up the whole northeastern side of America. Right. And so when that happened, Rockefeller understood that, if this thing gets up, it makes me lose money because Rockefeller was in oil.
Yeah, coal and oil.
And he transferred oil to kerosene, which was light back in the day. So JP Morgan said, listen, I'm going to buy the rights. I'm going to buy the license. He went straight to the other investor and say, listen, I'm going to buy the license of the AC model. Right. And I'm going to buy out, and then I'm going to buy up the interest on the company that me and Thomas Edison has. I'm going to buy up the shares. So I got control over the company Edison don't. The guy said, how you going to do that? He said, well, I'm going to sue you. You don't have enough money to go to court. Guy said, I'm not about to play that game because I don't have enough money.
Right.
Sued him.
This is the 1900s.
Right.
The game,
it was like a wild, wild west for sure.
We
ain't
nowhere near on the board. Okay. I'm saying we can't. These boys
playing heavy games.
Listen. So I'm not upset.
You know what I'm saying?
Because they've been doing it too. You
can't be. We playing chess. Right? That's why you got to understand this is all war and strategy. Right? They have the strategic efforts to sit patient and idle. They try to get the Federal Reserve was established in 1913, but that's not the first time we heard the language. They've been trying to bring it up, but the Congress and them shut it down because they didn't want central banks. But guess what they did? They waited their time.
The opportunity, absolutely.
For the right opportunity at the
right
right
environment,
moment.
the right moment.
Right?
That last crisis, they were like, wait a minute.
Yeah.
See, what you need is a central banking system where all the money could go.
Yeah.
We could prop it up.
Here's our chance
to help the industry, to help to give confidence into the American people, so that people would trust banks, and so it went down.
So J.P. Morgan put together. He said, "I'm gonna buy the AC, your license. I already got control of the DC. Now I got full control to be the person who powers this big power plant out in Niagara Falls, puts me in control, makes me more money, right? So that play, right, that's how business works. Business owners investors I should say, look for business who might be failing and need cash. Look for businesses who might be hurting. That's why we buy businesses. Some investors buy businesses. These are opportunities and plays that was been established since the 1900s, right?
For sure. They've been playing this game a long
time.
Banking, insurance, and stocks is the fabric of this country.
Yeah. So now we get up to exactly what you said, the Panic of 1907, right? And the person who was instrumental in driving this forth after the Panic of 1907, you had Senator Aldrich, who became the head of National Monetary Commission, had no skill about money at all. But what he did was, this is the patience and the time. He took 2 years to go overseas where the Rothschilds and the international bankers wined and dined him for 2 years straight.
Right, like you need to put this up.
And he learned about money in Europe, traveling from the different cities over there for 2 years before he returned to America. Between him and Paul Wahlberg was instrumental in establishing what we now know as the Federal Reserve. But they knew, they said, hey, so they gathered some prominent people, came on down to Georgia, Jekyll Island. So you had a Rothschild representative through Paul Wahlberg. You had another Rothschild representative through Aldrich. You also had Nelson Aldrich, who was a father-in-law of John D. Rockefeller, right? And you had J.P. Morgan and them Rockefeller, J.P. Morgan, who had interest based off Rockefeller owning the National Bank and J.P. Morgan owning J.P. Morgan and what we now know as J.P. Morgan and Chase. And so when they went down to Jekyll Island in a secret fashion, a meeting to come down here to come up with the language of how they wanted to get this act passed. And one thing they knew for sure was we can't call it a central bank. That's your first smokescreen. We can't call it what we know it is, but we'll name it this. and the Republicans shut it down because they didn't want the control, but we'll slide it through a Democrat. In December 29th, 1913, when what's the president at that time? I want to say Wilson. Woodrow Wilson signed the bill in December, right before Congress broke for Christmas break, right? So, and then we got the establishment of the Federal Reserve, which acts as a centralized bank for America. And now today, I want to say have something like 13 branches across the U.S. that control the monetary policy of America.
Yeah.
It's good history. This is like good stuff.
The money, the checks, the electronic, all the things.
Right.
All the things.
Now, it just so happened, I don't know, but these guys, most of these guys are Jewish. Same time, 1913, the Fed was founded, was the same year that the Anti-Defamation League was founded, which we now know as the ADL. Most people might not know about that, but the ADL is instrumental in discrimination against Jews. So when people get quote unquote canceled for
hot and bothered
for what Jews do, it's through the Anti-Defamation League that they fight those type of discrimination acts and slurs against the Jews, right? And so it's funded. Money, power, control.
Organization.
It's the three triangle, the three leg of a triangle.
Very disciplined, organized.
Yeah.
And well funded.
So now we got the history of the Fed in there, right? It took me a little minute to get there, but we got to understand the players, the play, where it came from, and where we are today so we can understand how to use this to our system. So now we get into what they established and how banks work. It's very interesting. I'm studying for the Series 65. And one in the first chapter, the first thing that pops up is they break down the role of the Federal Reserve, right? And it said the Federal Reserve controls money supply growth. The Federal Reserve is a board that has great power to influence the supply of credit in the economy. Every month, the Fed meets to analyze trends in the economy and decides its action relative to the money supply. The Fed can use its influence to either tighten credit or loosen credit based off what's happening in the world.
Yeah.
Now, one of the key factors to do that is to look at the CPI, which if you watch CNBC, that's one of the first things they talk about in the morning. What is the CPI index, the consumer price index? Who's a consumer or what's the consumer price index? The consumer price index is how consumers spend money, which then dictates how the economy is flowing and if we have money and or if we are strapped for money, basically, right? We get a little street.
The confidence in the market. If people are spending money, that means they have enough discretionary income to funnel and push the economy forward. If people are tight, are not spending, they're only buying the needs and not the wants, then they go, hey, wait a minute. The consumer is not confident. The money is not there. We need to make lending and getting credit easier, right? So that we can funnel and push more money into the market. And then the opposite happens, right? We see that happening now, you know, when they increase the interest rates to make money more expensive, make it harder for people to get money, to slow down the rate in which people buy and purchase, to slow down, you know, the flow of money. And so, you know, to help with price gouging and things going up, inflation going up. But, you know, I mean.
Now, why is that important? Reason why we broke down, or at least I brought up the consumer price index, because it dictates monetary policy, but we got to understand who are the consumers and who are the most consumers in America. So they say are black people and African American and their spending power. Black people have a 1.3
billion
or trillion dollar spending power, which means that we are the heavy consumers that control what gets sold to us based off what we have.
And how much it's going to cost us, right? Because you
got to understand your power here on how you can not be in politics, but influence politics in a certain way.
That's why you got to be in politics.
Right. I'm not disagreeing.
It keeps coming back to
I'm just saying,
in politics, right?
I'm saying you're in politics.
You got to be involved because everything you do is involved. It's like the old, like back during those times, and they would say the kingmaker. The king, the person who influenced the king, was the person called the kingmaker. The closer you get to the people who make the rules and regulations, help you and benefit you.
Yeah.
So, I think, politics is important. We have to learn how the system works to leverage it, for the best way we can anyway.
Sure.
So,
and just to, you all know I go back and forth on politics, but just to be clear on my stance on it, I have no issues with us getting into politics. My only issue is that I need us to be in the political affairs that move the needle, that helps us out, right? Most times we see political fashions coming out of the civil rights movement or era, and it was about having equality. And I think we tend to approach political affairs from a let me be equal, let me have some rights here, which I'm not mad at.
Where some of that too is a part of the system to dangle a carrot over here while you're not focused on what's happening over here. That's what you have to be involved in, all of it. I want my equality, but I also want the same access to money as anybody else. So I let it be known, I'm not saying that we only need to focus on social issues. We definitely need to focus on those as well, and economic, because it goes hand in hand. If I have access to money and funding through a bank, then guess what I could do with my business? I can scale it, I could grow it, then I can hire my brothers and sisters in that regard. Yeah. So you have to be involved in all of it. And that's just basically my point. As you can see, when you're talking with the central banking system and you look at our spending power, we don't leverage that. We think that, I don't know, that it's not just hair and clothing and crap, right? It is stuff. We have a large swath of the GDP in this country, and we do not leverage that, right? We don't see the power in that. Everything you see and how people advertise is Black. The culture, who we are, the language, the artists. You can go on any, turn on your television or your radio, the commercials, the advertising, how they're marketing and targeting social media is our culture, is our language, is our fashion, is our tongue, is who we are. And we just, to me, don't see the value in that. We don't see the value in that. And I think socially what happens is that some people then take that and try to bastardize it. Without offending people, but who we are is who we are. But when you see someone else take that and don't give us the financial respect in it, makes it really bastardized. Like, I feel like you shouldn't take and consume someone else's culture without giving it back to them, right? You shouldn't use that in a way to obtain my money and not give me anything for it. Mm-hmm. So, yeah.
It's a little more ethics. So, moving on. So the Fed sets monetary policies, right? So one of the reserve requirements of the Fed is the reserve requirements is set at 10%, right? Which means, what does that mean? That means that all banks that falls underneath the centralized banking system have a requirement to keep 10% of its deposits inside the bank every night. Every night they close their doors, somebody in the back is calculating money. And we got to keep 10%. If we don't keep 10%, the Fed instituted a law or a policy where I can go, if my bank is Bank of America, your bank is Chase, if I'm running low on money, my first line of defense is to go to Chase and say, hey, let me borrow some money so I can keep my monetary policy at 10%. Tomorrow the banks is open, depositors come in, I'll pay you this money back. And that gets loaned from a peer-to-peer base, and guess what? That has interest. I'm making money from a bank-to-bank relationship,
low
right?
Low rate.
So then if the bank is required to hold 10% of deposits, it's also authorized to lend out 90% of its money because that's how banks make money. Make no mistakes about it. Banks make money from lending out and giving out loans and collecting interest on the loans itself so that it can...
The money that's not theirs, that they don't even have.
That's not theirs.
It's phantom money.
So then, right? And then,
can you imagine such a thing?
About that.
Can you imagine?
Just I can go in my kitchen and just
like I'm gonna lend you something based on. It's like having a product. I'm gonna sell you this product, right? But I really don't have the product.
Yeah.
You know what I mean? But that's genius. That's the genius.
That's the genius of the system. That's what they did.
Yeah.
So what they and what they did,
it's like pre-ordering.
Yeah. So the money in the banking is established. It's like a brand, right? So what happens with brands is basically you know a brand and name a brand off what the brand owner say he or she is. If I'm the tax king or God or whatever that looks like, I declare that, and because I say it so often, you now say it, and now you believe it, just like I have believed it. I made you believe it, and now we all have a belief system that promotes this brand. Well, it's the same thing essentially happened with money. See, money used to be, when you look on a dollar, it's a depository note. It used to be backed by gold until they realized, well, hey, we could just print this thing out the kitchen and send out money and say that this is worth the value that we say it is in the currency. So if I go in my kitchen and print money, I'm counterfeiting. But the government can do it, it's legal.
For sure.
Right?
Yeah.
And so when they do that,
it doesn't dilute the brand.
It don't dilute the brand.
Right.
Now, America's money, this is where we get into, people get all, well, how come we could send money overseas and we got people here who's without home in America, right? Unhoused. Well, they're unhoused in America, right? How come we can send money overseas to fund wars, but we unhoused in America? Well, you got to understand the international monetary policies at play. Mm-hmm. And America wants you to know, since we centralized this system, my money is used across the United States of the world. Excuse me. My money is used mostly around the world. My money is used in other countries where their own currency is barely used, right? And so America established its dominance with its own dollar. Got to understand how this stuff works. So when I make deposits in my bank, when my check clears on the 1st or the 15th of every Friday, and they calculate them zeros in there based off a calculation of money moving. Right? So sometimes
it's not really going there. Right?
It's in the system that shows you, right?
Yeah.
So we can get into some of those conspiracy theories. But if you ever looked at your phone in the morning, sometimes early morning or sometimes late night, and your app ain't working, it's fidgeting, it's frigidating, and you got to log out to log in, and now you can clear it. Now you can see your money in your account, right?
Like, wait a minute, let me do that again. Refresh.
Right.
Refresh. Well, go to my balance.
That glitch is intentional because something's moving in the back of the system. They moving money, shaping money, a stroke of a key, and we got money, right? So when you deposit your money, your bank go from your hard-earned efforts into the money, they lend out 90% of your own money
at a premium.
That's why credit unions, in a sense, are such valuable, because its members. The union is made up of its members, of its deposits. So the money that you get at a different rate, it's like peer to peer being lended.
So you're getting that discount
through a third party
versus
so you get it
Fed.
Right.
Because the Fed is lending the banks money to hold a certain point. And the Fed goes, all right, if I lend you this money at 3%, the bank wants their cut. So then they say, all right, if you lending it to us at prime, 3.25%, then we're gonna then lend it out to you and I, adding an extra 2% on there.
Yeah.
Right. So now you're at maybe 5%.
Yeah.
So that's how it works.
Now watch this now, because why is this important? If the banks make money from lending money, and we already established that the reserve have a 10% reserve rate that they gotta hold, they can lend out 90. Well, now you understand the push for the commercialized, put your money in a CD, put your money in a savings account. Because if you holding on to money, that's money that the bank has that they can leverage to lend out more money. So the more money you hold.
The 401k is a gag to me all the way. It's like, they want to hold more of your money so they can have more lending power.
That's $1 billion retirement system there, boy.
And then they tax you on it anyway when it comes out. So it's like, let me take your money now. We're going to invest it. We're going to take care of it for you. Then when you're 65, we're going to penalize you if you take it out early. Your own money.
Yeah.
that you making money off of.
Yeah.
You making money off my money.
Yeah.
If I withdraw it early, I
Talk
get
to me
penalized.
good now. Talk to me good.
I get penalized for taxes
Yep.
and withdrawing it early. And then
Yep.
I might still have to pay the taxes on what I'm withdrawing.
Yeah.
Then when I turn 65 and I say, okay, I'm ready finally to retire. Oh, well, you know what? Because, there was a crash or there was some issues during this year, your money didn't earn quite as much as we thought it would.
Yeah.
Right? So this is what's left.
So how to use this to your advantage? So the banks established the requirement, right? So now most people talk about credit scores from a business perspective and a personal perspective, but we don't realize that banks have their own credit score rating inside the bank. And typically, the more money you hold in your account over a 90-day period, the balance,
the better your
rating is to get access to capital and funding, right? So outside of the traditional racist system of people not giving us access to funding, I think it's a crazy way that we play this game as well. Is if we follow the rules to a T, it might get you the ability to have more access to funding. Most of us don't keep money in the bank. I understand where it came from, but maybe we might have to change that perspective in order to play the rules at this game, right? So I know that when we established the Freedmen's Bank, and when the government came in and seized the Freedman Bank, this is a bank that Frederick Douglass was president of, put his own money into. When the bank came in, when the government came in and seized that bank and the money, the government took that money and didn't give it back to black depositors. So this is why your grandma, your great grandma and them put their money under the mattress,
hid it somewhere in the house,
in the tomato garden.
Yeah,
and that's why you got a funny relationship with banks. I don't trust banks. You don't even know why you don't trust banks. You just know you don't trust banks, right? But that's where that came from. But now we have the ability to somewhat have some control.
Insurance too, everything.
Insurance.
Every time we tried to play the game, we were slapped in the face.
Yeah, we were insured. That's how money was. You needed a way for money to be tapped into a computer to give it some value, right? So every time, I'm not gonna go down that rabbit hole, but so that's where we at. So the longer I hold money into my bank account, the better it is I'm able to receive money off the money I hold because I got a better rate with the banks. And so when I tell business owners to establish bank accounts, my rule of thumb is big bank, small bank, right? And small bank could be your a regional bank, a credit union. Yeah. It could be anything that ain't big bank, right? So big banks is Bank of America, Wells Fargo, Chase, and Citibank.
And your black banks now, we got a few.
And now we got black banks, right?
Get your money into a black bank.
All of it is based off relationships. So why do I say small banks? Well, when you walk into a small bank, I have the ability to sit knee to knee, toe to toe with a banker.
Yeah.
Build relationships. Notice the titles of any business relationship banker. Their title is a business relation or relationship banker, manager or something of that nature, right? I have the ability to establish a relationship with that banker so that they can understand what it is that I want to do, how I want to do it, how much money it's going to yield them and me so that I can get access to capital via no-doc loans, which is credit cards, or actual capital from the bank, right? And banks make money off lending, which means that you have to have the ability to pay the loan back with its interest.
Correct.
They don't want you to pay off the loan. They want you to keep the loan because the longer you got the loan, the longer they continue to make money. We understand the rules here. I know y'all can't talk back to me, but we got to understand these rules because it sets us up to be a well-oiled machine, a great businessman or woman.
And it really helps you take the emotion out of leveraging other people's money, right? And so when we talk about we're afraid of credit, we don't want to get loans, we don't want to do this, it's because we're all emotional about it, right? And so to really scale and move your business, you need to have good credit and use other people's money, right? We just went down a history of how people establish industries and businesses that are dominant today by using someone else's money, right? So today, if you have good credit and you have a relationship with a bank, leveraging their money to make money is how you have to do it, right? You know the game. You're like, okay, well, they're going to make money off of me. Who cares how much the interest rate is if you know and you have to plan how you going to pay it back? Same thing I feel like with the 401, right? People are like, hey, should I take money out of your 401? If it's going to make you money, I would take money out of your 401, right? Take money out and figure about the interest and go, all right, well, I'm going to buy a property. I'm going to use my own money. Look at the rate, look at the fee or the penalty for withdrawing it. It may be better to take money out of your 401 versus going to a bank, right? You have to look at all of your options. But what I would tell you is, just like Tariq would say, is building a relationship with banks is super important. I used to be a banker, and I remember when people would come to me with all their issues. Being a business banker, I could go to bat for them. I would talk to my underwriter. Hey, listen, this is a client that's been with us for years. They're trying to do this. They're trying to do that. I painted the story, and they weren't just a number or going through an algorithm. I was able to talk to the underwriter and say, hey, their relationship, they've been with us for 10 plus years. This is their deposits. I think we should give them this loan or this line of credit. And 9 times out of 10, they were like, okay, you're right. Let me push it through, because all I'm seeing is numbers. All I see is the dots, and I'm connecting it for them. So your relationships in the banks are super important. I know that's what I did as a business banker at Wells Fargo. I was able to color in and fill in the dots for the underwriters, because all they're looking at is numbers. They don't know you. It's cold. You then build a relationship with the banker, the manager, and to say, hey, listen, going down the line for future, if I ever need something, they can color in the lines for you. And speak to the underwriters on your behalf that you can have a better opportunity to get the loans and lines of credit you need to scale and grow your business. Businesses always need a injection of cash or funding to take them and transition them for something, because it happens, right? Your sales might be down, but you're like, oh, this is really good. If I can get into this industry, if I can get this supplies and get this manufacturer, I know that this could work, right? You still have to pay your staff. So sometimes businesses need an injection of money. And where do you get that money from? Your banks. You use their money, not your own. You use their money. Why would you want to play Russian roulette with your money? Because business is a risk.
It's all risky.
So why would you want to risk your back? I'm risking theirs. Thank you. Yeah. Good night.
This is a history lesson. Y'all know you ain't hear this in school. Nobody, college or university, right? This is all through study and play. This is, what's life without risk? I mean, we do this, and I go down these rabbit holes and stuff so we can understand how these things work, so you can use it to your advantage.
Yeah.
And what's life without risk if I'm not willing to risk it for something better? On the left side, you got poor and poverty. We already broke down classes, and we're probably going to continue to do that. It's a risk factor involved in that. If I'm poor, I stay I'm in impoverished conditions. My mental is impoverished conditions. It's a risk factor. I got to fight for my life every day.
Every day.
It ain't going to get no better on the risk side, but at least you got money that provides options and opportunities to do something different. The stressors are different, but they're both there. Don't fold under pressure. Understand the rules and get after this, right? So much, in fact, that you guys, as citizens in America, and the Biden administration heard your cry and plea. So what they did,
Biden administration,
they injected a policy to where the SBA give lending to black business owners, right? And so, despite what you want to believe about the president or whatever that looks like, or what Kamala Harris do or don't do, right? The numbers are showing, at least from the SBA standpoint, you got total loans fiscal year 2023 up is 4,781 loans, over $1.4 million lent out. That's a 7.6% shares of loans that's been lent out to black institutions, black-owned businesses. Is right there. From the SBA to your local banks, you can go get it. You got to build these relationships. Why is that important? Well, if you Google right now why black businesses fail, one of the reasons is access to capital. But not only is it access to capital, it's not even understanding how to get access to capital.
Absolutely.
That's what's important.
And we almost think it's admirable to get it out the mud.
Yeah.
We always think it's something we have to do. Well, you don't have to do that. I know when we started our business, we started with our own money, our own funding.
Yeah.
We got it out the mud versus leveraging credit and saying, well, let me. I
how
could
further
start,
you could be
right.
if I went to chasing them and said, let me get the
line of credit
let me get the money.
Listen.
Right? And when do you get money? Listen, the best time to get money before we wrap this up is when you really don't need it. Get the options early businesses go through cycles. It's been happening since the 15, 16,
since we
1700s.
Said when we started this, and what was that, 19 so-and-so?
19, 1800. It's going to continue to happen. You seen it with COVID. Businesses will always go through cycles. When you don't need the money is when you need to establish the credit. Get the $250,000 line of credit. Get the loans. Get to this. Get to that. So when it's time for you to weather the storm through a crisis, that's how the rich get richer. They got money on standby. So when them periods hit, I get to buy up America. And you can do the same thing. I get passionate behind this. Whew. All right, so we're going to get up out of here. So the SBA loans, right? How do you get access to it? How am I eligible for it? I'm eligible for SBA. Say this is a 7-A loan. It's an SBA business loan program that provides loan guarantees to lenders to allow them to provide financial help for small businesses, acquiring finances, short and long-term working capital gain, refinancing current business debt so you can get out of debt, purchasing and installment of machinery and equipment, right? Fixtures, furniture, change of ownership, all these things you can get loans for.
Tons of loans. You just got to have your stuff in order. We got to do some work.
The basic eligibility is operating a business that's operating for profit, be located in the U.S., be under what the SBA size requirement is. I think a small business under the SBA is something under $25 million in revenue and a certain number of employee businesses, right? And then have the right type of eligibility for funding, right? So some of them risky credit businesses and stuff like that are non-credit friendly, right? They're not going to want to lend to you because it's a risk on top of a risk, for right? Sure. So just go to the SBA. They have representatives. They have people that can help you build relationships with your bank. What bank should I build relationship? Whoever your money's going to right now.
You're banking with
Start there. Yeah. Start there. If I bank with Navy Federal, call them up. If I bank with Chase, go see them. If I'm at Regions or whoever else bank it is, PNC, all of them, go see them. Right? And so we wanted to break down the history of the banking.
That's right.
So you can understand where we at today with banking. So you can look at the options that you have to grow and scale your business. This year was about scale. That's the only thing coming out my mouth this year is scaling.
More for 24.
More for 24. Scaling. Right? So we hope we've been able to help you. Our team worked hard to put this together, to put good content for y'all. We hope you like it. Please like, share, subscribe to our YouTube channel.
That's right.
To hear more stories, more tips, more strategies, right? This is a strategic channel where we play out strategies and things, right? And so we'll be here on the next episode. And you got any closing words before I close this out?
What he said.
And don't forget to keep minding your biz. We'll see y'all on the next one, y'all. What's going on? We're glad to have you at another episode of Minding Your Biz podcast. Listen, everything that you hear or see on this podcast episode is for educational purposes only. We have not seen your books. We have not seen your specific situation. Make sure you please seek your financial advisor for anything pertaining to your situation. Peace. All right, y'all. It's a wrap.
Listen, like, comment, subscribe, share, tell your friends to come check us out at the Mind Your Biz podcast, y'all.
And we'll see y'all in another episode of Minding Your Biz. Peace.